All right, guys, welcome to day 14 already of the TradeFlow competition. Today I'm going to be talking to you about just a day that I didn't take any positions. I think that is going to be quite useful for you guys to see what I normally then look at, and then exactly why I missed getting triggered into positions, what the difference is of reasoning behind why I would normally not enter or normally how I would enter. So let's go straight into it. From yesterday's day, we came off of the backbone of still that short-sided bias. We've been heavily short so far for the two first weeks of that competition. Overall, again, we get one of two things, right? We get that pretty much that run that we always see, that protraction against our overall bias. We have Asia low and we still have this level that comes from last week, right? We've been targeting this level pretty much since Friday. We tried to shoot that level and we created that on the Thursday prior to that, right? Overall, it's still your main draw on liquidity, especially with DXY as well. So if we quickly go to DXY, you can see that this was that main level that we wanted. So it's one of two things. You can see that it was this level right here that we wanted to target, as you can see, and yeah, you can see that we wanted to get that level hit. But one of two things, right? The first thing is that we're playing off of the backbone of this protraction. But again, with these aggressive plays, you either want sweeps of previous daily high, previous daily low, such as what we had here on clearly the Friday and going into the Monday. So we swept that level and then we're looking for shifts. So it's, again, that playbook that I've told you guys. We're going from levels into arrays into levels, or levels into levels, and this is kind of that levels into levels, which is a little bit tougher because we don't have necessarily a really clear H1 array aside from this, right? So this is kind of the one that many people don't like to see. Let me clean up my charts just a little bit so it's a little bit more concise, right? After that, we can go into the nitty gritty for a second. As such, right, what you can see is many people don't like to see this one, right? Many people are not a big fan of trying to get order blocks on H1, right? Many people like to play off of H1, H4 imbalances, but this is super valid, right? Okay, I'm kind of glitching out here. This is super valid, as you can see. Not the easiest one to spot because, again, many people aren't the biggest fan of going short or going long off of H1 OBs, H4 OBs, but it is very much present, right? So if we draw this like this, we can understand that we're off of that bearish OB coming into pretty much that M15, right? So we have something here, and personally, the model is there, right? The model is there, but just not on M50, right? You can see that this is your liquidity grab as such, but you can, this isn't the ideal, let's say, candlestick formation that you want to see. Why? Because understand that what you're doing is you're creating an order block here, but that order block automatically doesn't become the strong point where you want to go off of a shift, right? If that shift was into, let's say, an imbalance on M15, I would be a lot more confident shooting that. But in this case, I just wasn't that confident shooting it. But again, what we can do is if we do have, let's say, liquidity being taken out higher in price, we can then start looking for E2s. Obviously, if this is your window for E1s, right, as such, this is your window for E1s, then here, your window of E2s will appear until Asia low is taken out, right? And then lo and behold, you can see already kind of what happened. There's no way that I got triggered here. Absolutely not, especially on the competition with not the most favorable spread, to put it like that. I had it right here, stop loss above this high, isolated somewhat, where I know that my invalidation point is okay, going for 2RR, but did not get triggered. Neither was there a point for me to consider on DXY to do some sort of cross reference, because here it just moved way too quickly, right? You can see that it was, sure, it was triggered, but way too quick, right? In my opinion, these are not the type of setups that I want to cross-reference with DXY. In hindsight, why? Because you can see that the distance between this DXY was already so much further. And then you could argue that, yeah, you get a love tap on EU. It is going to be favorable for you. Sure, but wasn't there. Personally, I was not active enough to get this cross-reference on EU. But I want to showcase you that it is possible, right? What I don't want to see you guys doing is something like this. Many people, when they play an E2 or like a continuation play along these lines, is just playing the SL above that distal line, right? So if your imbalance is split up as proximal and then this your distal, it's very aggressive to do that. What you can do is play it here, right? When you have an E2 in, let's say, a protraction above, let's say, your Asia or below your Asia, then you can consider that. And I'll showcase you guys a couple of examples of what that looks like in future videos. But many people, they play continuation plays like this, they get knacked, right? And then eventually it showcases the actual move, and then you have an isolated high that you can take as invalidation point, and then price continues lower. So make sure that you don't do something like that when you're trying to play an E2. This is completely valid, right? This is just in terms of risk. Have it above the high of the most recent candle before the one that creates the imbalance. Does that make sense? I hope that that clocks for you, because that is a good way of having a continuation play and having, it's like a shoulder, right? You want it to be isolated on that shoulder, because if price continues here, then most likely it will go back into a liquid state of the market, right? And then from there, you can see whether or not you want to play a sweep that runs the high again, and then play your E1, or whatsoever, play another continuation that forms better and play the first trade on the breakout. Understand how you want to become a little bit more intuitive, right? If you're a manual trader, you just need to become a lot more intuitive with your trading, especially when you're trading liquidity concepts. The beauty is in understanding the language that the market is trying to speak to you. The beauty is in understanding order flow, is understanding liquidity, rather than trying to just do set and forget type of pendings, because those are very easy to do. But in conditions like this, and if you're trading a competition and you're reading price and you're on very, very low time frames, M15, M5, going off beat M2, M3, then it's very nice for you to see what you are capable of doing. Overall, again, if I go to M5, you could argue that I could have gotten in on, let's say, this refinement. But again, remember what I said with those imbalances in previous lessons. Remember what I talked about. I talked about exactly how if you have the higher time frame already being smaller, in this case it was smaller, then keep it like that, right? There's no point in me trying to now refine into a lower time frame, which increases my map, right? Which increases my POI. My POI is already refined from the higher time frame, which is leading. So why would I try to refine it on a lower time frame, which it doesn't narrow it down, right? You want your blinders to kind of funnel into a precise area, just like when you go with OTEs. But if you're going on a lower time frame M5 and now you've got more information, right? Then that's kind of a struggle, right? What you could have done is potentially 2 M5s like this, right? And then you would have had it split up. But again, then realistically, what would you be doing? Hindsight, very, very good friend of ours, you could potentially be looking at something along these lines, right? Where you go like, okay, hey, this is what I'd be looking for, midpoint. Even if you were to take it on, let's say, proximal, you look at this point and then off of the shoulder pretty much of this one right there. So I hope that that kind of makes sense. I hope that you get a little bit of an understanding here. But ideally, what we want is this area right here, right? This would have been the M15 area that would have been ideal. And then something along these lines with SL over that high right there, going for a nice 2R that you could take to the low. I missed this move. What happened afterwards was pretty much this vicious whipsaw to the upside, flipping the entire day. And I personally did not look for longs whatsoever, right? I saw this, people were looking at this as well, catching pretty much entries here, which was pretty nuts. And once this occurred, I was looking for some sort of pullback. That price wanted to go lower here to then go higher to potentially target this, but I didn't get involved. I did not get involved in that position. There was a continuation play here. You see how this is a lot more valid. Again, this would have been really nice. Again, you see how you can put your SL on that candle here, but then RR wise, not the nice. It's still very much valid, right? Let's not be completely disregarding here. You can take 1.7 R, bang it in the bag, and we can all be happy about it at the end of the day. But wasn't my cup of tea. But this is a nice way of showcasing you how a standard continuation play would have worked to the upside, right? If you have liquidity being taken here, you have your shift here, right? Taking out sell side liquidity as such, and then going higher to the move there to target that London high. Hope that helps, and I'll see you guys in the next video.